own mic. So everybody, so first of all, I would like to congratulate those who stayed so late. This is a great opportunity to see everybody. Just so everybody would know, we're recording this session to the known podcast, the Bitcoin people. Yeah, so this is one that's going to be remembered. So guys, let's just quick introduction. So Igal, let's start with you.
Hi everybody, my name is Igal Nevo. I'm head of INX Venture. INX is a trading platform for cryptocurrency and also for security token. It's the first company in the world that made a digital IPO or regulated ICO, raised 85 million from a retail and accredited investor from crypto and fiat money. And we hope that security token will become the new normal in the next few years.
Yogev.
Hey guys, I'm Yogev Toby. Although my appearance, I'm a lawyer. I am co-head of the consultancy practice in Porat Group. We are enable and assist blockchain venture to tackle any obstacle in advance. So we build infrastructure and the architecture of blockchain ventures, and also executing and everything we build. So this is in general.
So Alex, it says Tezos on your shirt, and then it says Mavryk.finance on the screen. So,
and Tom Hanks as a Maverick now.
Yeah.
The new movie.
It's Tom Cruise.
Tom Cruise, sorry.
Who counts? Yeah.
I wear a few hats. My name is Alex Davis. I'm the head of innovation at the Tezos office here in Israel. And recognizing the need to vertically integrate different DeFi protocol features, I founded a DeFi banking DAO protocol called Mavryk.finance, where we've integrated a decentralized oracle similar to Chainlink for bringing data on-chain, which controls an on-chain lending DAO, essentially, and on-chain treasury, et cetera. So it's a little bit different. It kind of mixes everything. It's a DeFi banking protocol. It's really the best way to put it.
All right, great. And that one will carry us to our first question in this session. Well, I think this whole day we've been revolving around blockchains and about the usage that we're all gonna be doing with them for the near future. And I think that here in the Israeli Crypto Community Convention, I think that we may need to start looking into the bad things that happened, in the past few months, days. So.
Years.
Let's cut to the chase. So Terra Luna crashes. How does it affect DeFi scene in the world?
That's an interesting one. It kind of, Terra's mechanics worked in an up market. It was terrible in a down market, and it got played really badly. I think the thing that we're going to see essentially is there's an increased sight from the regulators, SEC, et cetera, that will take a look at DeFi, and we might actually start seeing this push to DeFi 2.0, where INX comes really in handy. Because DeFi, decentralized finance, is actually really just a spectrum between completely being decentralized and completely being centralized, as we have most of finance today. So we're definitely going to need to see this more permissioned DeFi, which I guess is a weird thing to say, but it's kind of like fractionalized NFTs, but that's a different subject. But another thing that I don't think we've really realized is that there were a lot of funds that were in Luna, and they lost a lot of money, and they're holding a lot of other tokens. And when they need to kind of build up their liquidity reserves, they're going to start dumping all the other tokens. So I don't think we've seen, $40 billion got wiped off the face of the earth, and we've barely scratched the surface of, I think, its repercussions.
Yogev, do you think that we actually need to call on the regulator to come into our space? Because sometimes, people are saying, well, we're techno-utopians, and we think that there's no need for regulation. And then you have a stable coin.
We all need to hold guns, and we have missiles in our.
Yeah, and so there's no need for regulation, but then a stable coin does not appear so stable.
So we need to understand why regulation are born. Okay, they usually in normal territories they're born because they try to mitigate or to cure any market failure. Okay. So we see it now in Luna. For the long term, I think it's a good thing because it's educated the market that we don't need to think only Wild Wild West. We need to understand the logic behind the regulation, what they try to cure, and what they try to cover, and then to adopt it, even if we can solve it with technology, but if not, to go to a hybrid situation, DeFi to CeFi, to understand what we can bring in technology and to protect the investors, to protect the small, the end user client, and but on the other hand, to enable everything that possible as decentralized.
So, but then again, where is the decentralization in it? Because if everything is, if it's CeFi wise, then, being decentralized, it's more expensive, it costs a lot more energy and a lot more effort, and you have such efficient banking system. So why do you need it decentralized if you're actually centralizing it again?
I think the lesson we learned from DeFi is the amount of fund that decentralized financial institutions are gaining on the back of the simple person. DeFi enabled the simple person, everyone, to join the party. But as we see in Luna case, it's not safe enough. So if you calculate the profit, or like you said before, it's super expensive. I'm not sure it's so expensive, because you need to calculate the loss. For example, is Luna.
So, Igal, do you think that this crash calls on a change on the DeFi ecosystem? Is there something that we need to change in the way that we think about this new technology?
I think we need to all industry to grow up, to be grown-ups, to take. To understand that things can't stay in that way. Too many reg pulls, too many crashes, too many, I'm sorry. If a surgeon had the amount of debts as the amount of debts that become on a blockchain, he was in jail. So self-regulation, or the standard that everybody say on the white paper, on the presentation, everything works. Really, it's amazing. It's mind-blowing. But eventually, you need to grow up. Regulation, as Yogev said, it's the way you play. There's a standardization that everybody know how to do. And you, as the owner of company, owner of blockchain, participant on blockchain chain, you need to understand that there are blocks that everybody know. They have they do what they have to do. And Terra, it's fine. It's like a fire in a forest, It's terrible, it's something, but eventually the forest grows stronger. So us, as the industry, we need to understand regulation. It's not bad. She's also need to involve. She also need to be more practical, more up to date, to understand that the possibility of DeFi, the 24/7, the self-custody, the cryptocurrency, everything is evolution of the financial system, but we have to have standards, because nobody of us will give our children food for babies if it's not regulated, right? We won't take something that government checked and said that it's okay. We remember Remedia.
There's a big difference there.
Huh?
There's a big difference there.
I'm not
Yeah,
sure.
Alex.
Finance, it's much more bloodier than kids' food. The finance
Okay,
people,
that's a big thing. Yeah, Alex.
Yeah, there's a really big difference there. I think something that we don't take into account is that DeFi is the consumer protection against regulation. So what you were saying is that, we have,
lots of bots. No, because not everybody.
Because there's no manipulation in the stock markets.
Not everybody board of a bank, that know everything and screw. Most of the
No,
people there, they don't understand what they are signing in. So it's not the best.
Yeah, but let's be frank about finance. It's meant to keep the majority of people out. Regulation is there. You could say that it's there to protect you, like your baby food for your children, but that's really there to make sure that you don't poison your kid with like lead with food coming out of China. Completely acceptable. Where financial regulation is today is nowhere near an acceptable level, and this is why it's one of my favorite lines. I gotta trademark it or something. But DeFi is a violent, non-kinetic uprising against tyrannical financial oppression. It is
Cool.
Okay, so expand about it. Yeah.
So
What do
in
you mean
today's
by that?
Well, in today's world, if you actually want to control your finances, if you go to the bank, so we've relocated like most of our operations now to Dubai. So Israel's not the best place for regulation, but if you go to the bank and you want to pull out 8,000 shekels because you're going on a trip, they ask you why you need it. And my first reaction is, how about you piss off? It's mine. And they don't really kind of like they have these overarching rules over how you can use your money, where you can use your money, at what time, where. I mean, we're one step away from, if you voted for the wrong party, then we can shut down your bank accounts. And that happened. We saw it, months ago in Canada. So DeFi, it's no coincidence that Bitcoin came out a year after the financial collapse. And if we want to talk about collapses of financial products, 2008, now the printing, the overarching print, the tripling of the M2 money supply, DeFi is there as the consumer protection from banking regulation.
But you need to ask why. Why they're asking you, what are you going to do with your 8,000 shekel? Why?
Who cares?
Maybe
Who cares?
it cares because maybe the execution of the regulation is wrong, and I agree with you. But the logic behind it, it's something that we need
to not finance terrorism. Who cares? And I hate to say it that way, but does anybody know here how what the failure or success rate of KYC, anti-money laundering, or anti-terrorism financing laws are?
Okay, I'll count.
How many people here know what the
I think
success rate
there's
is?
It's only for
one
taxes
in the
reason.
back.
What is it?
Okay.
99 what? Failure or success? Exactly. So
More
why
than,
are we caring?
more
Why
than
does
99% failure.
There's
Okay.
a 99% failure rate on KYC and AML. So if the Mossad or Shabak wants to actually track down Hamas's Bitcoin transactions or fiat transactions, they can just go get it on a centralized exchange, have an operation, get their hardware wallets. You know, there are centralized pain points that we can nab them, and they're not doing it because Coinbase scanned your passport. So we need to stop caring about this, like the bullshit archaic laws of we need to stop financing terrorism and let the intelligence organizations do what they need to do, but give people the right to use their money.
You're right.
The Biden administration wants to track every payment over $600. You buy your kid like a new iPhone, the government wants to know about it. That's insanely scary.
Igal, so we're deviating a little bit, but it seems that that countries who has let's say liberty as a principle of their government, of their way of controlling people, is going to crypto, and then authoritarian countries like China and like Russia are going out of crypto. And what's Alex saying now is that well, they're just this whole regulation part, this whole thing where people try to limit DeFi, this is just a way of control. What do you think about that?
I think, first of all, Alex is right. You're right about the numbers. You're right about the financial system. You're right that everything is not, it's something that poor of thinking and laziness that it's happening, but not because somebody, deep states, shit, whatever. But I want to say, that's why I said evolution. I think that a combination with those two things, the regulation and the possibilities of the technology, the DeFi, the interesting things, if they emerge together and they take the disruption of our financial system, is by entering the possibilities, but not lowering any barrier that are for regular investors. Yesterday somebody said, you have to know what you are buying, do your own due diligence, check everything.
But Igal,
You should, of course you should.
Just a second.
Everything?
Yes.
You need to do your own due diligence for it.
Of course.
So 98% of the population, my mom and your mom, my barber and your barber, nobody going to do that.
Igal
it's going to be
Actually, my barber asked my opinion.
credited investors.
Problem.
The same, we become credited investors because we know how to read, and everybody else.
Accredited
won't use
investor
that.
is the most bullshit thing I've ever heard in my life.
Sababa, but that's what's happening.
Okay, so Igal, I have a question. So
And
Isn't
China
that-
is wrong. I want to answer Alex. But she can't win in this line. And now we see that miners go back to China, and all Chinese are there's water goes wherever they can go. So you can't really stop them. They bullshitting themselves. And the American bullshitting themselves either way. They
okay,
need
so
to
quick
be-
follow-up question, and then I go to Yogev. So
Yeah,
so Igal, isn't that a bit paternalistic? Meaning that the whole cryptosphere is created a world which you can control your own assets, and now you're saying, well, let's go back to the system where we're being controlled, where our funds are being controlled, where we can invest only what the government lets us.
Your decisions are being controlled.
Our decisions, yeah.
Listen.
Okay, that was very Jewish of you. Okay.
Oy vey. Listen, I don't afraid of governments, okay? Because I work in the government, you work in the government. We know that they are not
Worked.
They're not demons. Most of them are intellectual people. They have no courage. They're afraid of many things. But eventually, they try to do the best for the country. I truly believe.
I wholeheartedly disagree.
Not the first time, but I think eventually.
I have to step in here for a second because you said like you need to they need to protect investors, they need to do their own research, and this idea that only things that are on the public market are safe to buy. If you look at, for example, the upside that investors get in private rounds, seed rounds, Series A, Series B, et cetera, all the upside is in private equity.
If you're buying security token, right? It's security token.
You can ask in parallel the question you asked regarding the percentage of KYC. What is the percentage of shitcoins that survived?
That's fine. What's the percentage of startups that survived?
Oh! Next question.
Wait, I got it.
Yeah, Alex, finish your and then I go to then I have to go to Yogev with the
There's this false perception that the SEC does their due diligence on these companies when they go public, and that everything will be fine, and it's safe for you to actually minimize risk. So to take a company, crypto and equity into account, Coinbase, directly listed on Nasdaq or whatever on the public markets, and at $100 billion valuation. Everything was quote unquote kosher. And if you wanted to double your money, which for the public market is quite hard, but from a private equity market is quite simple. If you want to double your money, Coinbase had to go from $100 billion to $200 billion valuation, just to 2x your money. Not a lot. Now, when the past year since Coinbase has come out, its market cap is now at 17 billion. It is down 72% since not at an IPO, but since they went public. You're telling me that's
companies.
So all the rich people got rich. They literally dumped on the open market, and you're telling me that's safe?
You are right. That's why
you keep saying
in
that.
INX we tell companies come on round B when you have your product, sell a community, and give them a partnership and a token, equity or dividend token. That's why. This is evolution. You take the traditional market of a stock exchange, and then you bring the possibilities of the crypto and blockchain world, and that's our regular people, our retail can find Coinbase none on valuation of 100 something, on very much less than that.
It seems.
I think the answer is in the middle between.
Just a second. I think that first of all, lunch was pretty good probably. Everybody had coffee. So Yogev, I want to regarding this really amazing debate. So Christine Lagarde in a speech last week saying that we need crypto regulation in order that people won't invest in assets that are worthless. And regarding that, regarding the important stuff that Alex, who's now texting, you're on stage, said.
If I'm not mistaken, she was just convicted of financial fraud.
Who? Okay, never mind. Let's talk about it later. But then again, Christine Lagarde said that we should regulate crypto in order for people to not invest in assets that are worthless. Does that even make sense?
Yeah, it makes sense because look at the NFT world now, okay? You took a bunch of Z generation kids, have no clue what they're fucking buying, sorry. And now they lost the money because they were in the bottom line of the pyramid, okay? If someone was there to tell them, hey guys, please be transparent of what you are selling. Please tell them they are not selling, you are not buying anything. You're not buying the IP of the monkey. You're not buying even the picture of the monkey because it sits in a centralized sharat, sorry.
And a centralized server. Yeah, but if we're talking about Bored Ape Yacht Club, they actually did buy the copyright. But I wanted to ask you something else because we're talking now about DeFi. So you're saying, well, I'm borrowing money from a protocol. I'm borrowing coins from protocol, and the interest that the protocol pays me is at the token that was issued by that protocol. So for Christine Lagarde's aspect, that can be worthless. So should that be regulated?
It's worthless because if you think about the economy of the protocol, if you look on the other side of the borrower and the lender, if I can take money less than I borrow the money, that means there is no economic logic behind it. Something is wrong. There is no logic that the interest that I'm putting the money inside the box is higher than the interest that I'm taking the money out of the box.
Well, unless it's just
Alex,
subsidized.
Exactly. For how long it can be subsidized?
Until you gain market traction.
Okay, how many get the market
Made
traction?
of style,
Okay?
made of style, you know.
No,
that's
you
the
see,
way.
it's
good
sometimes
style.
failure. Took a call of the Israeli one. Amazing project, amazing logic behind it. But it didn't last because of that, because you cannot subsidize it for the long term.
It was in Israel.
So Alex, I'm thinking that it's like from this perspective, it's like the traditional finance had gotten into that whole blockchain thing, and now they're building the same thing again, but with the blockchain sauce on it.
Yeah, they really are. But just for context, Christine Lagarde, the head of the IMF, was convicted of and avoided jail time because she's the head of the IMF. So the head of the IMF was convicted of financial fraud, but then stayed because she's the head of the IMF. She didn't go to jail. So just a little relative context.
That's nice.
In regard to rebuilding new products, we're completely rebuilding new products. But the thing is that we on one hand, I agree with you, Igal, that we need light regulation.
Only
But the rules are archaic. Like even when you raise in Series A, B, C, D, you can only take, well, at least in Reg D in the United States, you can only take 32 non-accredited investors. So great, now you can have 32 non-accredited investors over a website that you find. But we need to rewrite the rules of finances as we have today. And if you look at everything that the government is doing on top of us in finance, even in Israel, why are we seeing everybody leave Israel once they start a company? Because the regulations are terrible here. Why is the United States government blaming, they blame everybody. So there's the Putin price hikes, there is the blame on Trump, there's the blame on, it is on COVID, but when you print 3 times the amount of money in the ecosystem, you're going to have massive amounts of inflation. And so the regulation now needs to come back and not be on regulating the people. It needs to be on regulating the government.
I want to go. Yeah, you can clap. It's fine. So I want to go a little bit backwards from the whole regulation thing. We're at
Just want to say something. He's right.
Oh,
He's
yeah,
right.
yeah. They were clapping
He's
before.
right.
They were clapping
I'm
before.
not saying he's doing too much, but he's right. Really.
Okay, so what I wanted to ask is, we've been building the Crypto Companies Forum for a while. Now we've been working on the field, and what we're seeing is that there's some sort of a balance between the technical people, the visionary, and the regulation part. And the technical people are saying, well, you guys, you're talking about the possibilities, the markets that you're going to build, but actually something is getting lost. The decentralization is getting lost. And I want to ask, I want to go first to Alex. Alex is from Tezos, so probably he'll have a good perspective on it. There's a strong criticism about Ethereum network that says, well, guys, you're doing this whole DeFi thing, and it's very nice, but it's not decentralized anymore. It's almost completely centralized. Nobody can run a node on his own computer. This is just a new form of the banking system, but not cost efficient, which has a large energy consumption, and you're just rebuilding it again.
If we're going to criticize Ethereum, I think we need a lot more than 15 more minutes. But
let's start. There's a place to start.
You're right. A lot of these chains, like for example, if you look at Solana, vastly centralized, also doesn't happen to work for the better part of a year. But Cardano doesn't work. There are actually a very few amount of chains that are sufficiently decentralized and operable, and you kind of trade off scalability with decentralization. Tezos has done a really good job of actually maintaining that. If you look at it, our TPS isn't the same as Solana, but it functions in a decentralized manner. So again, trade-offs. But no one really needs this type of scalability that everyone just kind of like boasts numbers. When it comes down to a lot of those things, I don't think we've seen a blockchain that will replace Ethereum that is currently available today. I think a lot of it today is either swung from one side of the pendulum to the other, either too many coins out in circulation in the public, too many coins in circulation with VCs. The biggest problem I think I have with Ethereum is that it's built by developers for developers, and most of the layer one solutions you see today are actually, they're not built by entrepreneurs or businessmen, they're built like by devs. And for, with all due respect to all of the developers here, I know because I brought one, developers should be developing and entrepreneurs should be entrepreneuring, for lack of a better word. And when you get that, you get these products that really don't work for the mainstream public. And right now, even in DeFi, we're still seeing all the same money kind of circulate around in the same fishbowl. And we need to build out other products. And that, again, this is where INX comes in really deeply, is that we need to build these layer one solutions that actually bring off-chain value on-chain.
Yogev, do you think that decentralization is a core value that we need to keep? We need to keep on.
Of course, but it's supposed to be decentralized enough. Not to be most decentralized as possible, but decentralized enough that enables you and provide you what you need from this decentralization. It's trust and the fact that you don't, you own what you got and no one can change it, or at least.
But if it's centralized, then you don't own what you got, and people can change it. That's what centralization is all about.
I have a funny comparison, actually, about this. Now that you kind of inspired me. But when it comes to decentralization with too many voices and then not like a central party that can actually change anything, Israel's a wonderful example. We've got like 50 political parties and nothing gets done.
But still it works somehow,
This is stagnation.
Still, one of the leading financial countries in the world, amazing high-tech innovation, 6,500. All Israelis think that we have like 100 billion people here, not only 9. It's works somehow. And I don't believe, even though it's the Holy Land, it's because of higher force.
I was going to say, it's probably only because of God that it works.
No.
This is how you know we're chosen.
Okay.
I want to say something about the decentralization. Listen, ideology, it's great, even by paper, communism, it's amazing, it's open your mind. When you are studying at the university and hear the first time what Marx and Lenin and Trotsky said, wow, you say it can work. Everybody gets what they need, everybody brings one. And we saw what happened when they got the power into the 1917, and we see it until now, what happened to Karl Marx's excellent idea. We need to become realists. We need to see if the decentralization of that, it's really work, or because nobody really can understand that, it's easy to hide all the ways that you can manipulate the system. So I know to insert government or regulation, it's not the best way. You are right. But as the cliche that democracy is the worst but better than anybody else, when we are born, we have a contract with the state, with the government. They protect us with firearms, and we give them the right to bear arm and beat us when we start beating somebody else. And to do the financial system, why we do that? Because it gives some kind of safety. But in democratization, as if we can change them, or they need to bring us more answers than China or other more totalitarianistic state. I say there's for us, the entrepreneurs, the blockchain industry, we need to talk to them. We need to be part and do the guidance together. We know what we need. We know where our problems. We know where other people doing something not cool, and we know how. We probably need to know how to stop them. The grassroots of the industry, the users, are not good enough. We see that. We see that, every
But
other day.
I think you're.
That's why you open the forum, because only with the negotiation, everybody around the table, Odette Salumi and Ilan from the Israel Security, when they come in, they understand, they learn, they have value inside.
So first of all, we've opened the forum. As Alex was inspired by Yogev, we were inspired by you. So first of all, that's the reason. But I think that what you're saying, and this is something that I think that was a great example to the opposite, actually, because if we're talking about communism or socialism, we're talking about a system that centralizes everything, and everything is being planned. And decentralization is actually the opposite. I'm stepping a little bit aside from the moderator chair, but it's like decentralization is democratization. So we're democratizing. We're actually adding democracy to the financial system. But I want to ask you something. I want to take this down from philosophy, and I want to ask you something. This is I want to go to the real market paradox. When are we going to see mortgages on DeFi?
I think the prior question should be when we're going to see real estate on
Yeah.
blockchain.
All right.
Because only then we can think about mortgage, because someone needs to enforce it and to kick the poor guy from his house if in a liquidation event.
Okay.
So the first question should be...
So that was a bit cruel, but okay. So
intentionally.
it's true.
Intentionally, and it's true.
And what need to be done as
So-
an ex-lawyer?
So we need to bridge with the centralized, because you need the local register that registers the real estate to join the same system, the blockchain. You call it DeFi. I'm not sure it's going to be DeFi in real estate. But the first step, when you will be able to tokenize the real estate itself, and it will be acceptable by the local register and by the local country, only then you can think about using it in DeFi.
So, Igal, do you see blockchain bridges for real estate or for other loans?
Of course, we in INX, we have companies that want to register real estate, not only building in Manhattan or warehouses of Amazon.
Not shares.
Not shares, real
Estates.
Real estates for real people, to the possibility to buy, and you can become as equity inside people, become with the holders an equity partner. I think the interesting part, somebody need to do that. He need to walk the walk, not only talk the talk. He need to put money out of his pocket and do all the Via Dolorosa and be the first and pay time and money, but eventually he succeed that. That's the way Shai Datika, the founder of INX, done. It took him 3.5 years and millions from out of pocket and 18 rounds with the SEC to get the first SEC-registered IPO, digital IPO. So someone, the first, it take millions, and now it's only cost 1 million, and the others probably cost less, and you can raise real money that is backed, and it's real, and it's you are not afraid that if somebody said no, it's not kosher.
Alex,
So somebody have to do that, to do the real hard work.
Alex, do you see blockchain bridges to conservative loans?
I don't really like bridges, but that's a whole different story. I had a whole panel discussion in Davos yesterday about this. But when it comes to real estate on blockchain, we're getting there. It's very different tokenizing equity than it is tokenizing the deed or a tabo in Hebrew. And I think we're very far away from having the tabos actually digitized. They're archaic. Like, you need a lawyer today to really go check everything with a tabo. So today, in today's real estate tokenized world, you essentially have to put the property into a company, tokenize the shares of that company, and then offer it to investors. I do think in that fashion, well, first off, I think every form of value that we interact with over the next 15 years will exist on a blockchain. So that's something else completely. But it'll include real estate.
But then again, how can you evaluate a person that takes a loan with a protocol?
In what sense?
And
Without
what
the
sense?
breach.
In the sense that when somebody takes a loan, you have to see if he has the credit score, if he's in the...
You can build, credits. First off, we don't have credit scores in Israel. They're trying to build it now, but we don't have them today.
Okay.
In the United States, the credit scores are also, it's a archaic system, so we need to rebuild credit scores. But another thing is that It makes it a lot easier to have foreclosures, which is not a good thing, but at least makes it more simplified. It makes it a lot easier to get mortgages and loans. Every single month you can pay off. Instead of paying off your interest every single month, you can pay off principal on top of your interest, which right now, if you take a mortgage, you're actually paying off the majority of interest for the first something like 15 years on a 30-year loan.
Of course.
But I do think we're going to end up seeing, because I'm working on it, and a lot of things I can't say right now, but I do think we're going to see permissioned KYC'd mortgage pools so that people can put their money directly into lending. Because right now you put your money in the bank, they give you 0.001%. You make nothing, the bank profits billions. And we're going to be able to put our money into a mortgage pool, which then gets lent out on top of tokenized securities. Every single time someone pays back their mortgage payment, they receive part of the tokens of their property back into their own wallet, in a sense. So we're going to end up seeing this. It's going to take a while until the Tabo is digitized, but we're seeing it today. And for example, Dubai is leading in this. The major property, like the Gindis of Dubai and BSTs, are well, Emar and Damak, but I'm not sure. People
But
know
you
them
still
here.
need a centralized entity.
Well, because then
it.
it's stock. Yeah, so it's permissioned for sure. I mean, like I said, decentralization is a
So
spectrum.
Yogev, I want to ask you something. We're about to be wrapping up, but I want to ask you. So, if we will take, in order to take a mortgage with some sort of a DeFi protocol, then on the other side we'll have to get a stable coin. But still, stable coins are not that stable as the Terra Luna thing that we talked about at the beginning of this session. Do you think that government issuing digital currencies, state-sponsored digital currencies, will help this ecosystem, or will it just make it centralized again?
I think it will assist to scaling the system, okay, and bring more conservative players to the game, and then it will expand the whole territory, and maybe the failures that we see now will be eliminated because of the sophisticated and old school player that will get inside. So I do think that CBDC will help, especially if you will have a KYC permissionless system. So yeah.
Yeah, it'll help control you.
CBDC, it's not a failure or something that the industry lost. It's a success.
Okay, just let's say what CBDCs are.
Central bank digital currency. It's
Okay.
like digital shekel, digital dollar that the government issuing.
It's like
a central
Tether,
bank.
but really backed.
Really backed and
On
ruled by
blockchain.
governments and yada yada yada. Okay, but I say it's amazing. It's amazing that the government take the basic of for crypto and make our own crypto. Most 99% of the people live in the world are trusting those kind of trust the government, so trust the coins, the CBDC, and if they're going to be a CBDC, we really get the core of the agreements and the trust that many of the public need. And I've been in China before Corona. Everybody is paying only with their phones, everything with QR code, no money, no the real bills, nothing. And this is the normal of them. I don't think we need to be anything like China, but it's normal for everybody. The hobos are begging for money with QR codes. Nobody have the penny to give them.
I don't know if that's the future
No,
that
that's
we want.
the future. The future is everything is digital. Everything is and now
Centralized.
for infrastructure, it's okay.
It's
Tether?
definitely not okay.
Okay,
that
Alex.
is synthetics.
Okay.
It is,
Alex.
It is definitely not
It's
okay.
okay.
CBDCs, I was a fan of them originally. They scare the living shit out of me.
Why?
So, one, you look at for example, China, you brought it up. What are their civil liberties in China? They have concentration camps in China at the moment. So the thing that scares me about a CBDC...
Not because of the
thing that-
sexual...
Yeah, it is, but the thing that scares me about a CBDC is all of a sudden you get, let's say, for example, right now, Democrats say, oh, you voted for a Republican, you can't go buy meat today. Or the Republicans take over and they say, oh, you voted for a Democrat, you can't go buy a house.
You are flying to
I'm not, but it's occurring today. I'm not flying to...
And then you go back to Bitcoin.
Well, so what the thing is that I think I also spoke to Circle yesterday in
Also, I
Davos,
said-
who controls
Circle.
USDC,
Yeah.
and so it's a lot better than Tether. But I think that we need lightly regulated fiat-backed. Well, there's a difference between fiat-backed stablecoin, asset-backed stablecoins, and algo coins. Algo coins will fail, and that's why Terra did. I don't think you need fiat behind a stablecoin, but you need assets behind them. So we need to differentiate between those. But
so what is the difference between CBDC and Tether? It's the same. You need to hold $1
No.
in order to meet another one.
A CBDC is backed by the government. The government can print unlimited amounts of money that it wants to. Tether or USDC or a fiat asset-backed stablecoin is limited to the amount that the government does. So I know that there's a slight differentiation there, but if the government today had digital money when they were printing outrageous amounts of money, imagine how easy it would be if you just go into the computer system and say, oh, you know what? Like, we're just going to, like, beep, 5x the money supply. It'd be way easier than it is today.
Okay, so guys, I want to thank you for a very, very, very energetic session. Thank you very much, Yogev Toby, Igal Nevo, and Alex Davis. And thank you.
Hirshman, thank you.
Thank you very much.